Welcome to the final section of PNJ Group's ASC 710 training. This section brings everything together from the perspective of quality and control. The common mistakes that show up repeatedly in practice, what auditors specifically look for under ASC 710, the roles and responsibilities across the team, and the period-end checklist that makes sure nothing falls through the cracks. By the end of this section, you will be able to identify and prevent the 6 most common ASC 710 mistakes before they happen, and understand the root cause behind each one so you can recognize them in practice. You will know exactly what documentation to prepare for auditors across vacation accruals, sick leave analysis, termination benefits, and deferred compensation. And you will leave with a complete period-end checklist you can apply at every close. The most fundamental mistake: not accruing vacation at all. This happens when a team is running on cash basis thinking they record compensation when the check goes out, but vacation is earned the moment the employee works. Every day an employee shows up, a fraction of their annual vacation entitlement is earned, and a corresponding liability builds up. If you only recognize it when it is paid out, you are systematically understating your compensation expense and your current liabilities. Accruing daily is ideal. At minimum, accrue at every period close. The opposite mistake is also common: accruing sick leave when the policy does not require it. Teams sometimes treat all compensated absences the same. If you accrue vacation, you accrue everything. But sick leave that forfeits at year-end and is not paid out on termination fails criterion 2. Accruing it anyway overstates liabilities and understates income. The fix is simple: apply the 4 criteria test to each policy independently. Vacation and sick leave are separate policies with potentially different conclusions. 2 more mistakes that audit teams flag regularly. First, the vacation accrual uses current pay rates even when a significant pay increase is scheduled before employees will use their balances. The measurement standard requires the expected future rate at which the time will actually be taken. If a 5% raise is effective January 1st and most vacation gets used in the first half of the year, that raise belongs in the year-end estimate. Second, restructuring liabilities get booked when management approves the plan internally. ASC 420 is clear. The recognition trigger is employee communication with sufficient detail. Board minutes and internal memos do not count. 2 more common errors to know. Mistake 5: presenting the Rabbi Trust asset net against the deferred compensation liability. Teams reason that the trust was set up to fund the liability, so showing the net is cleaner. But there is no right of offset. Creditors can reach the trust. Both lines must appear separately on the balance sheet. Mistake 6: when an employee is terminated, the team forgets to close out their accrued vacation balance immediately. The liability entry sits in the system long after the employee is gone, overstating liabilities and distorting the accrual. The correct treatment on termination: debit accrued vacation, credit wages payable or cash. Auditors do not simply trust the numbers, they tie every figure back to a supporting document. For vacation accruals, they want a listing of every employee with their accrued balance, daily rate, and total liability tied to the HR system. They will also check whether terminated employees in the period had their balances cleared. For sick leave, they want to see the written 4 criteria analysis. Your conclusion is only as strong as the documentation behind it. For termination benefits, they want the restructuring plan, the communication to employees, and individual severance agreements. For deferred compensation, they want the plan documents, Rabbi Trust agreements, and a fair value calculation for the trust assets. The controls framework assigns clear accountability at each level. Team members perform the initial identification, classification, and recording. They prepare supporting schedules and reconciliations, and flag anything unusual, borderline classifications, unexpected balances, or judgment-based conclusions, to the team lead immediately. Team leads review all classifications, journal entries, and work papers, and escalate to the manager on any matter requiring judgment or client communication. Managers approve all judgment-based conclusions and significant estimates, review and approve disclosures, communicate significant accounting decisions to client management, and sign off before the statements go out. The period-end checklist is your quality gate. For vacation and compensated absences, update from the HR system, consider expected future pay rates, include employer payroll taxes, apply historical forfeiture rates, and verify that terminated employees' balances are cleared. For termination benefits, assess whether any restructuring plan meets all 4 ASC 420 conditions before recognizing a liability, and confirm that any special termination benefit was only recognized on employee acceptance. Roll forward the restructuring liability. For deferred compensation, accrue for the current service period, confirm Rabbi Trust assets are on the balance sheet as assets, and remeasure to fair value if the trust holds securities. The 6 common mistakes in this section are not obscure edge cases. They show up in real engagements, in peer reviews, and in audit findings. Applying the 4 criteria test consistently, measuring at the right rate, timing restructuring recognition correctly, presenting Rabbi Trust assets gross, and keeping terminated employee records clean. These are the habits that separate accurate compensation accounting from one that creates problems at audit time. This concludes PNJ Group's ASC 710 training series. You now have the full framework to handle compensated absences, deferred compensation, termination benefits, financial reporting, and audit readiness with confidence. Thank you for completing the full ASC 710 Compensation General Series. Thank you for watching. Subscribe for more training from PNJ Group.